Hi everybody, hope you're having a good day. This is Frank Verni, and welcome to another edition of Real Estate Help by Frank. Now, banks are preferring short sales over other options, with more than $10 billion in mortgage relief already making its way to homeowners as part of the $25 billion national settlement, which was reached early this year with Chase, B of A, Ally, Wells Fargo, and Citibank. These banks settled their dispute with the states and agreed to stop improper foreclosure practices and provide relief for homeowners in the form of principal reduction, refinance, and short sales. Now, according to the terms of the settlement, a good portion of the relief was to be spent on principal reductions. The problem thus far is that the bulk of that money, about 90% of it, has actually gone to short sales. In the first half of 2012, short sales were up by 25% year over year. Of the $10 billion paid out so far in the United States, about $9 billion has gone to short sales, and about $1 billion combined has gone towards mortgage modifications, principal reduction, and refinance. Of the five banks, Chase has spent the most money on first mortgage principal reduction, but B of A hasn't spent much at all on these modifications. Instead, they've spent about $5 billion, the most of the five banks, on short sales. Now, B of A has made trial offers for mortgage modifications, but we'll just have to wait and see where those numbers finally land. The primary reason why banks shy away from modifications is because 50% of the modifications already approved over the last few years have defaulted again within the first year. So based on this, the banks have focused on making the short sale process much easier for both homeowner-occupied and investment properties. Everything is changing for the better and is far less painful for sellers. Lenders are cooperating more and more, and processing times are getting shorter and shorter as a result. Many of the banks are actually now paying homeowners on a case-by-case basis up to $30,000 in relocation expenses just to cooperate and participate in the sale. More short sales mean that there are fewer foreclosures dragging down the real estate market. And currently, there are more buyers than there are homes available, and we are starting to see prices rise in many markets. Since the banks are focusing their efforts on short sales, they are able to skip the foreclosure process, and they are finding that the property is easier to sell since it has generally been maintained better. They no longer have the responsibility to manage, maintain, and market a home, and instead are able to relieve themselves of the property and make their money right away. So if you or someone you know has been on the fence trying to decide when and if to short sale, don't miss what might be the best opportunity to do it now. Since the current laws in California allowing no deficiency and tax forgiveness where homeowners can walk away and owe nothing are set to expire at the end of 2012, and we don't know for sure yet if that will be extended. Please make sure that you deal only with qualified agents to get any of your questions answered. Experience really counts in this marketplace. Now, if you found this useful and you or someone you know could use the information, please forward or share it with them. I'd also appreciate any comments below, and by all means, please subscribe on the right to receive further updates. Feel free to contact me if you could use my help or have additional questions. We'll see you again soon. Thanks, and good luck.